Welcome, everybody, to the Orange Wheel podcast, the podcast where we support business leaders in navigating the monetary transition. Joined here today with Thomas Jeegers of Relai. Thomas, thanks for joining us.
Thank you very much for having me, Ted. Good morning.
Great. So, Thomas, you are the CFO at Relai. For those, who might not be familiar with Relai, maybe just give a quick download in terms of what Relai is and the services that it provides.
So Relai is one of the main Bitcoin-only broker in Europe. We are insisting on the pure principles of Bitcoin, like self-custody. So you buy Bitcoin and we always send them to you in self-custody. We never hold users' funds. And we are praising ourselves for striving to be the simplest app, the simplest way possible to buy Bitcoin to self-custody out there on the market. And so far, Relai has been a good success. So we are just over 5 years old. We now have completed our Series A, $12 million funding, and we just got our MECA license 2 weeks ago. So yeah, future is looking bright for Relai.
Yeah, very cool. It's been great to kind of track the progress of the company over LinkedIn and meet yourself and some of the other leadership team at various events here in Europe at various Bitcoin events. So yeah, thanks for that introduction. So Thomas and I have somewhat similar backgrounds in the sense that we're both CFA charter holders and both MBA alumni from INSEAD in France. So when I saw Thomas's profile, I had to kind of reach out and connect with him, and it's been a pleasure getting to know Thomas. So Thomas, your career journey kind of spans GlaxoSmithKline, ING Bank, and now at Europe's leading Bitcoin-only investment app. What would you say is the kind of through line in your own personal career? So
already very early on, I was very interested into money, how that impacts people. It is basically one of the most basic incentives that moves people to do one thing rather than another, to spend their time and energy in one way rather than another. And that's why I came to study economics. During my studies, I was fascinated by the concept of complementary currencies. So how multiple currencies working in parallel in an economy can actually stabilize economies. And I was always surprised that it was not something very, very much used. You know, we are used to having single currencies. I also studied computer science, so when I came across Bitcoin, it was probably a little bit easier for me to click with the concept of Bitcoin than for most other people, because I had this background both in economics, finance, and then computer science. When I was at the bank, I quickly became the local expert on blockchain technology, so at ING in Germany. And after a few years, a few financial certifications, I did my MBA that you just mentioned. And for completely unrelated reasons, I went to try something out with healthcare to see whether that would be my thing. It definitely wasn't. And I decided then to move back to something that actually was more fulfilling to me. So the pure financial sector, but not the fiat financial sector, not the strengthening the basics of a broken system, but trying to build a new system that would actually be more sustainable and be fairer for everybody. So I decided to dedicate the rest of my life to Bitcoin, and that's how just over a year and a half ago I decided to move full time to Relai.
Very cool. So is it safe to say, kind of when you first got exposure to Bitcoin, and that you quite rapidly recognized that it was really going to be, there had the potential at least to become a significant paradigm shift in global money? I guess maybe just shed some light on kind of when that mind shift changed from kind of seeing it as an asset to seeing it as the future monetary system. Yeah,
I wish I had the insights and vision that some OGs had at the very beginning of Bitcoin, but unfortunately, not really. So in the sense that already before I knew that Bitcoin existed, I was already holding speeches on, the currency networks and how complementary currencies could improve monetary network all over the world. In some sense, I always like to say that I was a Bitcoiner before even knowing that Bitcoin existed. This being said, when I was first faced with the concept of Bitcoin, I thought it was not backed by anything. I was more looking for a complementary currency that would be backed by a basket of commodities, and I didn't see Bitcoin as really the breakthrough. And I was working in risk management at the time, and to be entirely fair, Bitcoin was extremely risky. There were many reasons at the time how Bitcoin could have died, and as a very cautious person, I unfortunately decided not to invest at the time. Now, it's only really after the block size war of 2016, 2018, that I realized how the basics of Bitcoin became so much stronger, how the fundamentals.
Very cool. Very cool. So, I mean, you have as you mentioned, some of your educational backgrounds and professional backgrounds, but being like a CFA charter holder, it seems to be not many of us that are CFA charter holders and also Bitcoiners. You also have the FRM designation. I mean, how have these more traditional financial educations helped or hindered your understanding of Bitcoin and the new monetary paradigm?
Yeah, unfortunately, they probably hindered it more than helped, in the sense that through these certifications, I mean, they are very good in some sense. They are giving you very much rigor and a frame for thinking about financial assets, or at least for traditional financial assets. And they are very useful in that sense for let's say, the traditional world. However, they do not put much focus on starting from first principles or from wondering why does an asset have value in the first place. And especially, so none of these certifications ever, at least at the time, that was 10 years ago, at the time they did not challenge the monetary system, how money works, what is money in the first place, what is currency, how currencies are losing value over time by design. They do not address this. And in that sense, it was not obvious to me when I saw this new digital asset that was decentralized. I didn't know in which category to put it, because there was just no category existing in this framework that these professional certifications had given me to put it in. It was a complete different asset class from a completely different framework that does not fall into any existing bucket. So they probably did not help. This being said, they gave me the confidence that it's not that I do not understand the finance behind it, because I've done my homework, I've done the traditional finance certification, I've done the working in banking, I've done all of these things, and I just realized that all this is limited. It can bring you up to a certain point, but it's not making you bulletproof for the future, especially now, a future where the monetary system is put back into question, and where we are challenging everything that we thought we knew for the last at least 50 years.
No, I love that. It's very true in the sense that something that is fundamentally different. The education is kind of based on some underlying axioms. Bitcoin really challenges those kind of really fundamental foundations of understanding, and it takes a different kind of more critical thinking to kind of really break through that. So I think it's really cool that you've kind of able to see both sides of that. You talked about kind of currency debasement. How do you think companies, corporations, and businesses should think about risk differently in a world where there is structural monetary debasement and unsustainable debt levels at the sovereign level and potentially also in the private sector?
Well, it all comes down to changing your time preference. So unfortunately, the current system, with money losing value over time, pushes you towards spending that money as soon as possible. You should not keep money unused money on your balance sheet. You should actually try to invest it into a productive asset, or at least in assets that are inflation proof. This being said, you barely ever see a company that has part of its balance sheet in gold to counter the impact of inflation. This is just not a thing, for many reasons, one of which is that it's physical. You have the commodity risk and everything. But now companies have the ability to have a digital asset that allows them to prevent the monetary debasement that fiat currencies are creating, and it's setting a new baseline for how to measure performance. Because it's easy to say my P&L is growing 5% every year if the value of your currency is decreasing 5% every year. I mean, you're not creating anything. You're just able to prevent inflation from eating the value of your company. However, if you start to use Bitcoin as a baseline, which, for example, what we are trying to do now here at Relai, to measure performance against Bitcoin, not just against fiat currency, are we able to outperform pure Bitcoin holding? Because this is really the goal. Because if you are not able to outperform Bitcoin, then you're better off investing in Bitcoin directly rather than investing in the company. Because the company has some risk by design. So you need to at least outperform Bitcoin, and then outperform it so much more that you compensate for the additional risk that you're providing to investors.
Yeah, I mean, really moving
Sorry, I just wanted to say this is really the new baseline that we are adopting and that every company should be adopting. We should stop thinking in terms of fiat, which makes no sense. It's changing, measuring your performance in fiat currencies is changing the measuring stick every year. It's as if you're building a house and every year 1 meter is a different metric. Next year 1 meter would be what 1.5 meters was last year. It doesn't make sense. You cannot say I have a bigger house than last year if just because you changed your measuring stick, and we should start doing the same in the monetary world. The problem is that Bitcoin is still in its very early phase, so it has the potential to become this new measuring stick that cannot be manipulated at will by a centralized authority that prints it endlessly, but we will get there eventually. So we are now in this transition phase, and the early movers among companies will be the one who will benefit the most from this.
I agree 100% with that, right? And they kind of use this term monetary transition to discuss this transition phase where there are, I think, the most present risks and opportunities present now. And the opportunity certainly for those that, like Relai, that begin to adopt Bitcoin as the hurdle rate for capital allocation will outperform those that don't on average. So I think it's very, very fascinating. So how do you see the adoption of this new benchmark, basically companies moving to a Bitcoin standard? How do you sort of see that unfolding, given that, and I guess it's an integrated question, there appear to be a lot of barriers to adoption, especially at the corporate level. We certainly have seen, several dozen companies begin to adopt Bitcoin as a reserve asset over the last 12 months, but it's a far cry from the tens of thousands or hundreds of thousands of businesses out there here in Europe. So yeah, how do you suspect this adoption at the corporate level to transpire over the coming, let's say, 3 to 5 years?
First, let me correct a little thing. So you say we have seen dozens of companies. I mean, just at Relai, we have been introducing more than a few dozens companies just over the last year. We are seeing dozens of companies every month on board onto Bitcoin just via Relai. And of course, this is just a tiny fraction of the total market. We are actually seeing hundreds and upon hundreds of companies. Even there are hundreds of companies with significant amount of Bitcoin on their balance sheet. So while many people do not know it, so few people talk about it, but there is really this underlying trend growing where companies start accumulating, not just companies, but obviously also institutions. We have now nation states that are either discussing it or approving legislation to do it or already accumulating. So we are really just at the beginning of this acceleration phase where we will have more adoption. We had the early phase where you had all the OGs. In 2010, it was not a big deal to have 50,000 or 100,000 Bitcoin. I mean, that was worth peanut, just a few $100. Many of them have kept, some of their investment, and only now with Bitcoin stable above $100,000 for, the better part of the last 6 months. Now they start to offload part of this because obviously it's worth hundreds of millions today, what they had accumulated. And fair enough. I mean, if we were part of them, we would probably also want to improve our standards of living and offload some of it. But this is precisely the consolidation phase that we are in. The early comers are starting to offload progressively their very early gains, and now we have most of the people that have Bitcoin today have Bitcoin that have been acquired at about the level where it is currently. It's or at least within one order of magnitude, but not 3, 4, 5 orders of magnitude as we have seen in the past. So we are in this consolidation phase where Bitcoin has been relatively stable, and I think that we are preparing for the next leg up, where we will see now Bitcoin being more broadly adopted, more broadly accepted, without having to absorb tens of thousands of Bitcoin that are being offloaded by early comers. Companies are getting more and more into it. They understand it's an asset that is more and more stable, that is an asset that makes more and more sense in the current economic climate, and especially an asset that's more and more accepted. I mean, accepted by their board, by their investors, by regulators. It is now we have complete regulatory clarity around Bitcoin. We have fiscal clarity around Bitcoin. Now it just is becoming an asset that is part of the broader finance scheme, and I see this continuing and probably accelerating now over the coming few years. I'm saying few years, and I cannot tell you whether it's 2, 3 or whether it's 20, 30 years. There are plenty of things that can happen. So one thing is clear is that the only way is up, but timing is extremely difficult to predict, and anybody who pretends to know what Bitcoin price will be next week or next month is either lying to you or lying to himself. But over a long period of time, it is clear that the only way is up. There, I really don't see how anything could turn out to make Bitcoin go the other way now for a long period of time.
Great. Really great response. And I should have clarified, when I said dozens, I meant dozens of publicly traded companies. So those are the ones we have kind of insight into. But it's great. I think that's a really good point that you bring up, that it's unappreciated, all these private businesses that are quietly adopting without all these big press releases and corporate filings and so forth. And I think that's really important to hear directly from your client base and from your experiences working at Relai, that this is a trend that is gaining momentum. And you also mentioned the drivers for corporate adoption, being regulatory clarity, greater price stability, greater liquidity, and then in this macroeconomic environment that we're increasingly moving towards, where I think there's a more general acceptance of the quote unquote debasement trade, as JP Morgan is calling it. So I think there are all these things, and I totally agree that the actual exact timing is impossible to really predict. It can be something that moves very quickly or tends to be slowly, depending on a multitude of factors. One aspect that I'd like to hear your perspective on, however, is that I tend to get pushback when I speak with corporations, is that typically what we've been instructed in our traditional finance education is that when a company has excess retained earnings, that it should pay that back to its shareholders unless it has productive things to invest in, right? So they would see just holding gold or cash or treasury bonds or whatever on the balance sheet as being unproductive, and relative to how the investors themselves could deploy that capital or redeploy that capital in other investments. So do you have any perspectives on kind of that kind of mind shift change to actually see corporations kind of preserve wealth and value in sound money assets rather than redistributing it back to their shareholders?
Sure. The piece of advice you just gave from traditional finance indeed makes sense when you're considering fiat currencies. Because if you have fiat currencies on your balance sheet in a large amount, they are losing money every day. I think at the very beginning, first chapter of your first book of CFA, you will see €1 today is worth less than €1 of yesterday. So something along those lines. And in that sense, indeed, you do not want to have excess cash if you cannot deploy it. Now, we are here in this unique time in a generation, or probably in multiple generations, probably once in a century time, where the monetary system is shifting to a new model. And if you are positioned that you can take advantage of this macroeconomic shift, this social shift, then you should definitely take full advantage of this opportunity. And it's not about keeping cash on the balance sheet, it's about taking advantage of this shift by investing this cash in Bitcoin. And it is perfectly fair and reasonable for companies to even take risks in order to increase the number of bitcoins that they have per share in order to maximize shareholder values. Because shareholders are investing in companies knowing that there is some risk involved, and in order to maximize their shareholder value. If they wanted to avoid risk altogether, they would invest directly in Bitcoin if they have the mandate to do that. So yeah. I think that this new investment is a perfectly fair and reasonable thing to do for both companies and for investors in order to take advantage of this major macroeconomic shift.
Yeah, totally agree with that. And I suppose what we're going to see to some degree is this kind of bifurcation of investors, right? There's kind of going to be those that are slower to recognize this, that are going to perceive companies holding Bitcoin as taking on excess risk and not being responsible with the earnings. And then a growing cohort of investors that are going to move towards this Bitcoin standard, where they say, I'll keep my money in the corporation if it can increase its Bitcoin per share yield, I suppose, right? So I think it's interesting to see how this sort of plays out on the investor side of things. Relai is owned by kind of a Bitcoin only investors that understand the Bitcoin thesis, I suppose. So it's been maybe tell a little bit of experience about how your investors and owners think about whether they're also on a Bitcoin standard when they think about the returns on their investment in Relai.
Yeah, so the large majority of our investors are indeed Bitcoin-only people, like very hardcore Bitcoiners, same as what we are among the employee base at Relai, and they want to see the Bitcoin ecosystem grow. I mean, most of them obviously also have direct Bitcoin holdings, but this is a different type of exposure that we have with Bitcoin than just Bitcoin holdings. A Bitcoin holding will grow, obviously, when the price grows in value. Relay, in contrast, will make more profit when there are more people joining, regardless of the price action. So when you have more people joining, more people trading, and we are seeing especially spikes in trading volume when Bitcoin drops, because a lot of our users are Bitcoiners, like real Bitcoiners who understand it and know that every price drop, like we are seeing right now, is a major buying opportunity. So they are typically buying the dip, and that's where we see our revenue grow. When price then skyrockets back up, there we are seeing a lot of new joiners, people who FOMO into, so join to Bitcoin, and as they learn into it, they will then buy the next dips. So it is two different exposures, but yeah, both make perfect sense, and both are supporting the adoption of Bitcoin, the growth of the network, and strengthening this entire Bitcoin network overall.
And are all to the extent you're able to kind of disclose this, I guess, do the investors also like expect to see the reports generated, let's say, under a Bitcoin standard, where the unit of account is Bitcoin already? Is that something that's beginning to trickle through in the way that you guys kind of report on your performance?
No, this I haven't been asked by any investors yet. I like to prepare, we have our statements in Swiss francs, and I like to prepare our statements also in Bitcoin to measure our own performance in Bitcoin, to know how many, Satoshi per share we have, and to basically measure against our own hurdle rate whether we are genuinely creating value. Now, we are still in the relatively early phase of Relay, where we are investing for growth, and so it's difficult to create so much value per share at the very beginning, but for now things are looking very decent. We have consistently between doubled and tripled our size in terms of all metrics, so volume, users, revenue, of course. So literally between doubled and tripled every year of the past 4 years. 2025 will still be growth, but a little bit more modest, because because the MECA framework came into play, and we needed to work for a full year in order to get this MECA license that we just obtained, and now we are ready to resume that level of growth for the future, and hopefully even more. And yeah, I plan to offer it to shareholders, to show them those are our fiat statements, those are our Bitcoin statements, and share the analysis that comes with it in order to educate them so that they start thinking in terms of Bitcoin terms, because it's a very different story to show things in Bitcoin terms. It's as if I was showing my statements in US dollars versus in Swiss francs this year. Well, in Swiss franc we are growing a bit, in US dollars we are growing a lot. But it's not because we did better in US dollars. It's just because the US dollar has been weakening. It's not a fair comparison. And for the same reason, it's not fair to show results in any fiat currencies versus showing them in Bitcoin. People need to start thinking a different way, to start thinking with Bitcoin as the metric, as you were saying, as the hurdle rate. And this will still take time, because it's just so new, and it's not being made broadly. But we will get there eventually.
Yeah, and you bring up a really good point in the sense that I guess the investors that are Bitcoiner investors that certainly maybe understand why we should be using Bitcoin as a hurdle rate. They're investing in Bitcoin companies that are still, as you said, in the investment phase, and so it's not really. It's most noticeable, I suppose, once you have companies that are generating lots of free cash flow, where you really can kind of recognize that difference. But if you're still kind of investing, it doesn't always make as much sense. But I think it's great that you're already being proactive and beginning to communicate that to your stakeholders. You also kind of brought up the MECA, which was actually my next question, so that's great. Congratulations on getting the MECA license, the French MECA. That's great. I imagine that was a huge amount of work to get that done. I don't know if I want to dwell on all the paperwork and regulatory aspects. That would be maybe depressing to go into that, but I have heard through the grapevine that the French system was can be quite paper intensive, for lack of a better word. But maybe what I'd like to hear from your perspective is, how do you see Bitcoin native companies like Relai competing or cooperating or interacting with the traditional finance? Kind of how do you see the ecosystem evolving when it comes to Bitcoin financial services going forward?
Sure. To answer that, let me give a little bit more context around MECA, because while we are swimming in it every day, it is probably not clear to every listener what MECA is. So MECA, so market in crypto asset, is the equivalent to the former regulation Market in Financial Instrument Directive, MiFID, that existed for traditional financial instruments. So MECA is an extensive piece of work, probably the most detailed and strictest crypto asset regulation in the world, that has now been imposed in the entire European Union. It came into force on the 30th of December 2024, and every company active in the European Union had 18 months to implement, so to get the license and implement all the requirements. Now, to give a feeling for how much this is, we have been working on implementing the MECA requirements for probably about 2 years. And it was more than half of what we've been doing with our tech team. So the implementation from our tech team was just MECA requirements. From my team in compliance and legal, it was probably 90% of our time of the last year just working on MECA. We have answered several hundreds of questions from the regulator in total. We have delivered more than 300 appendices to our application. These appendices, some of them had more than 10 versions. So we're talking about literally thousands of documents that we have submitted. And some of these documents had like 50, 60 pages written in legal text. So in total, we're talking here about tens of thousands of pages. You need to imagine the entire bookshelf that I have behind me. You know, what we have submitted for MECA was probably more than the entire bookshelf that I have behind me in terms of text, legal text, reviewed by 5, 6, 7 people, both internal lawyers, external lawyers. So that's just to give an idea of how huge this thing was. Now, we are really happy to have been approved, likely with the regulator that is the strictest in the entire European Union. You know, I'm not sure we are allowed to say that formally, but behind the scenes, many people consider approvals by Malta or some countries, some Eastern European countries, to be much less strict than approvals from Western European countries, especially France. But now that we are on that level, so approved by likely the strictest regulator for likely the strictest piece of regulation in the world, I think we are extremely well placed for growing Relai. Now, why did I give all of this information, this background information? It's because unfortunately, all the small players in the industry will not be able to comply with this. Have the luxury of being very well capitalized, with understanding board members and having employees that are absolutely fantastic that went through this entire process. But this is not something that a small startup can afford. Relai is still likely one of the smallest possible company that can still afford to go through this entire thing. So in some sense, this MECA regulation will create an enormous barrier to entry and will prevent any small player to become a regulated financial company under MECA. So, you know, the big ones will easily comply with it. You know, the Kraken, Coinbase, Binance, what do I know? You know, they have teams of thousands of people in compliance. They can do it. Relai, we have 55 people now currently, and we just made it. Any smaller companies, I'm not sure that they will manage. And if they manage, that will probably be at the cost of many other things in their business model. So how will it impact the ecosystem? Well, it will centralize the ecosystem towards smaller players. Among these players, it is obviously a competitive advantage. You know, you prefer that, in theory, at least in economic theory, you prefer that there are fewer competitors, because then, you know, you have a bigger share of the pie. You can charge rates that are actually less competitive than they would be if there was perfect competition, so with low regulation. So long story short, this MECA regulation that had the intention of protecting users is actually doing the exact opposite. It's centralizing the power in the hands of the big ones that can afford to have millions of compliance costs, and therefore reducing competition, and therefore probably making it less attractive than it would be otherwise for users. So I think that the big losers in this whole equation are users. So the European people that are supposed to be protected, and the big winners are the big companies that can afford to be MECA compliant without this affecting too much their financials.
Spoken like a true libertarian in a sense that way. I suppose that's right. I mean, people tend to forget that there's the cost for regulation. and the security it provides, whether perceived or actual, I suppose, right? So I guess on the positive side, we would hope at least that there aren't any more Celsius or type disasters in the future with this kind of regulation. But yeah, certainly it's I think you described it well with like the Porter's five forces, the classic bargaining power of suppliers versus consumers, and more concentration, higher barriers. But it's good for Relai, I think, in the sense that it being a relatively smaller player, but still being on the right side of that barrier and having the French license, which will, I guess, make things easier going forward than companies that might have a Malta or Estonia license, I suppose. So congratulations again. I think that's huge. Can you also maybe discuss how you see so you kind of, I think, described quite well the crypto/Bitcoin players, but how do you see the incumbent traditional financial service providers responding or interacting with in the Bitcoin space going forward?
Well, they will need to adapt the same way they had to adapt to the internet 25 years ago. This is not optional. This is something that either they do it or they will be out of business very soon. Because offering savings account that give you 0.05% if you are lucky, and they will make other fees like withdrawal fees and so on to try to compensate for the interest they are giving you. So that's not gonna fly, and users do not care about having 0.05% while you have another asset that is increasing on average at 50% per year, and that they know their wealth is being eroded, so their fiat wealth is being eroded every year, while this other asset is preventing that erosion from happening, and is likely to do that even better in the future. So as education increases and as understanding of Bitcoin increases, there will be more and more people that will move away from the fiat system, and the traditional financial institutions have two choices. Either they adapt, so they embrace Bitcoin, they offer it to customers, build stuff on Bitcoin, they leverage the Bitcoin infrastructure, or they will become irrelevant, like the post office became 25 years ago. Like taxis are becoming increasingly irrelevant since Uber is in play. Like there are plenty of examples. Like the radio became less and less relevant when television came in. You always have these new innovations that are better in most cases, in most sense, that will take over a major share of the business, of the market that the incumbent is having. And Bitcoin is really doing that to the traditional system. It will not happen all at once. For the same reason, we still see people listening to radio, and in some instances, the radio is better than television. For example, when you are driving a car, but most people would prefer to watch television at home than to listen to the radio. And it will be the same with Bitcoin. Most people will prefer to hold Bitcoin than to hold fiat in order to transfer wealth from today to tomorrow. If I want to save money so that my son can go to university in 30 years or can buy himself a house in 30 years, well, I will not save money in US dollars or in euros or even in Swiss francs. I will do it in an asset that cannot be debased by a central bank. So be it Bitcoin, obviously, it can also be other assets, but it will not be something that a central authority can print an unlimited amount of without being held accountable to it. So the world is evolving, and the financial institutions will need to do so.
Mm-hmm. Yeah, here, I think just last week it was that Nordea, which is a Nordic-based bank, finally allowed to offer their customers Bitcoin ETPs. They've been very anti-Bitcoin. They still don't allow their employees to own Bitcoin ETPs or hold Bitcoin or anything. It's pretty interesting standard they're applying there. So we are certainly seeing banks here in Europe begin to provide, slowly adapt to the space. But do you see, so Bitcoin ETPs will still give the price exposure to Bitcoin and protect against the fiat debasement, but it's still not real Bitcoin. It's not a self-custody bearer asset in that format. So any perspectives on the benefits or risks of actual Bitcoin versus wrapped Bitcoin, let's call it, either ETPs or...
Sure. Bitcoin is actually a lot of different things. We are focusing now mainly on its ability to hedge against monetary debasement. That's one of the things that Bitcoin offers. Bitcoin also offers many other things. It offers you the ability to have a digital asset that is a bearer instrument and that is strictly scarce. This is something that obviously you do not have with an ETP, as you just hinted at. Some people will give value to one function of Bitcoin, others to other function of Bitcoin, and there are more and more functions that are coming in. Bitcoin can be used as a database for anything that you find valuable, and that can be shortened into a relatively small amount of characters. Bitcoin can be used as a time chain. Bitcoin can be used as a cybersecurity mechanism. There are many things that Bitcoin can do that are currently being underexploited or being developed. We are now in the very early phase where the most obvious use case as a hedge against monetary debasement is being broadened. That's where the ETPs come in. Now, as long as this is the main use case that you are looking for Bitcoin, I mean, that's perfectly fair. Now, if you are living in a country where your government is trying to steal your wealth in a way that a corrupt government cannot take it from them. And this is a use case that Bitcoin also offers, and that might grow in the future depending on how the world evolves. Now, at the same time, the existence of this instrument for that purpose will also hold traditional institutions and governments more accountable, because they will know that if they exaggerate in some sense, or offering too low interests or stealing too much money from their citizens, well, people will just opt out and just move elsewhere with their seed phrase in their mind, and that's it, and they won't be able to do anything about it. So it will force governments and traditional institutions to behave a bit more, just because now there is a competitor, now because there is basically this exit door in case they exaggerate in a complete totalitarian scenario.
Speaking of exit door, I can't help think about Christine Lagarde and the ECB and how they kind of have openly stated how they want to close exit doors. They want to make sure that people can't kind of escape the system, and now with the introduction or acceleration of the CBDC development of the digital euro. Any perspectives on how you see the digital euro, succeeding or failing, or how do you see any perspectives on how you think it will be rolled out and adopted by European populations?
It is rather mind-blowing that the ECB still continues on this dystopian scenario with the CBDC, while it has been made extensively clear also by peer-reviewed paper and everything that a CBDC does not bring anything to users. It does not provide them with any useful thing. All it does is provide more control to the central bank. And this is the one and only reason why the ECB wants to have a CBDC, so that they can take your savings, they can charge interest rate based on whatever, based on your carbon footprint, based on whether they disagree with what you post online, based on whatever it might be. But this is absolutely not bringing anything to users. Look, if we want to have digital money, well, we have something that is superior in every possible way to a CBDC. We have Bitcoin that is fully decentralized, that is accepted globally, that has so many more things that a CBDC can never match, while it removes all the risk that a CBDC does. So the risk of centralization and of taking advantage of CBDC. And look, even if somebody was giving the benefit of the doubt to a central bank implementing CBDC and saying, yeah, I think they have good intentions. Even if they are creating an instrument that is so powerful that it will attract to power the worst possible people in society, so that these people will eventually take advantage of that power at the expense of the people. So even, which I don't think it is, but even if it had a good intention, it is such a slippery slope that we do everything in our power to prevent that from happening. Now, this being said, I think that's already giving them more credit than they deserve to say that it is based on good intentions. It is a tool for control which has been made extensively clear by basically everybody in the industry, and how they can continue pushing for this dystopian future is absolutely outrageous, and people should really find it absolutely scandalous.
Great. So I totally agree. Given that one of the arguments Christine Lagarde has talked about is, defense of monetary sovereignty in light of US dollar denominated stablecoins and the proliferation of those globally, right? So you could imagine a future where the use of a US dollar stablecoin is just much more convenient than regular euros are, simply because it does travel on instantaneous settlement and some of these additional features that they have over classic fiat euros. And given that, as you said earlier, that the adoption of Bitcoin is quite unpredictable at the rate at which that will actually transpire. It could be 2 years, it could be 20 years. Do you see any role for stablecoins? And stablecoin, but in particular, a euro-denominated stablecoin?
Yes, there would be a use for stablecoin, at least in the short term, because the euro that you mentioned has multiple issues. One of the issues that we mentioned is monetary debasement. Since they keep printing, it keeps draining value. Now, another issue is, for example, the technical limitations that you cannot trade it, you cannot exchange it on weekends or on banking holidays, on whatever. There are plenty of limitations. Well, a stable coin would go around the second limitations that I mentioned. You can do it 24/7 instantly all over the world in a much smoother and faster way than the traditional system and the traditional payment rails allows you to. Now, a stablecoin still has the former issue of value debasement over time. So it is solving one item, not the other. Especially in the short term, there is added value by having euro-denominated stablecoins within the European Union. In the long term, it's a big question mark. So we were mentioning how the measuring stick will progressively shift from a fiat-based measuring stick, so unit of account, to a Bitcoin-based unit of account. So eventually, it will make no sense to measure anything, including a stable coin, in euro-denominated terms. So for this transition period, possibly. In the long term, I doubt so.
Okay, so before we wrap up, Thomas, a few lightning round questions. So just like 1 or 2 sentence answers to each of these. Mm-hmm. So what do you think the biggest misconception about Bitcoin is in the world of corporate finance, CFOs, boardrooms, etc.?
That it's only for rich people. Anybody can buy Bitcoin for just the equivalent of a few cents or a few euros.
Excellent. One book or thinker who changed how you see money and markets?
I'm a big reader, so that's a very difficult one. I will say Friedrich von Hayek, even though I will be honest, it's difficult to read. It's not the kind of stuff you read at night before going to bed, but the insights are fantastic. If
you could, and this is particularly relevant given that we're both INSEADers, if you could mandate one course for every MBA program student in 2025, what would it be? Introduction to money. So what is money? Great. And last one, what do you want your personal legacy to be about the monetary transition to Bitcoin? That I've helped more people to understand what money is, what good money is, and how to protect themselves for the future. Fantastic. Thanks very much for the lightning round. Last thing before we part ways, where can viewers who want to learn more about your work, your book, Relai services, where can they go to find out more information or get in touch with you? Find it on Google Play Store, Apple Store. Of course, we have a website built up, and you can follow myself, the rest of the leadership team, and many of our employees on LinkedIn, on X, on Noster, and on many other social media. Just type Relai. We are very easy to find. Fantastic. Thanks very much, Thomas. It's been a pleasure to catch up again. Look forward to following Relai's continuous growth and developments, and hope to catch up with you at some point in person in the future next year as well. Yeah, I would love that. Thank you for having me. The pleasure was mine.